Well, first of all, the talk of inflation is not nearly loud enough. I mean, if people really understood the amount of inflation that has already been created, the dollar would be going down, not up. But I think the markets still do not appreciate the gravity of the situation when it comes to inflation. They expect the Fed to be able to respond to an increase in inflation with rate hikes, and that the Fed will not let inflation get out of control. And so that's kind of why the dollar is rising. That's why there's some downward pressure on gold. It's because the markets expect the Fed to wage a successful war against inflation. But what the markets don't realize is that there will be no war. The federal government will simply surrender to inflation because they can't fight the war because they don't have the weapons. Yes, in theory, they could raise interest rates, but in practice, they won't because they've already created such a massive bubble in the economy that is completely dependent on artificially low interest rates. Were the Fed to raise interest rates to fight inflation, they would unleash a financial crisis much greater than 2008. And it would also force the U.S. government to not only abandon their stimulus plans, but to actually start cutting government spending or raising taxes to deal with the debt problem. Because higher interest rates would mean that it would cost the U.S. government hundreds of billions of dollars more to pay the interest on the money they've already borrowed. And they would not be able to borrow any more. So I just think, given how great the consequences would be and the trade-offs, the market is wrong here. Inflation is going to run much hotter than anybody believes, and the Fed is going to do nothing about it. I mean, they can talk about doing something, but when it comes down to actually doing something, no. In fact, they're going to do the opposite. Eventually, as interest rates rise, the Fed is going to reach a point where it won't let them rise anymore because it's going to be mindful of the effects that rising rates are going to have on the economy, on the housing market, on the stock market, on the U.S. government's ability to fund its spending. And so at some point, and I don't know where the breaking point is, right now it's like a giant game of chicken that the Fed is playing with the bond market. We're at 1.6, so far nothing. Well, 1.8, 2%, 2.5%, 3%. Where is the breaking point for the Fed? Because without the Fed, rates are going much, much higher. I mean, they're not going to just stop at 2. They won't even stop at 3 or 4. They'll go to 5%, they'll go to 6%. Without the Fed, the sky's the limit. No, I mean, what we're supporting is the bubble, not the economy. All of this money printing and spending actually undermines the legitimate economy. Yes, it enables Americans to keep on spending money, but buying what? If we're not producing the products, then we can only buy as long as we can import them from stronger economies overseas. And our trade deficits are exploding to uncharted territory, and that will continue until the dollar breaks. Because what we're witnessing is not economic growth. This is a bubble. Just printing money and sending it out to people to spend it, that's not an economy. The economy is producing. It's when we all work to produce goods and services, when we invest to expand our capital stock, when we innovate so we can be more productive. That's what grows the economy. Just printing money and giving it to unemployed people to spend, that is not economic growth. What we're measuring is how much of our economy is being dissipated, not how much is being created.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now, let's continue.
Yeah, well, first of all, a consumption economy is a bubble economy because economies can't run on consumption. They need to run on production because you cannot consume what is not first produced. Now, what you said is true. Since our economy is so weak and we're unable to produce the things that we're consuming, the weak American economies relies on strong international economies that are able to produce what we consume. But there's a limit to how much longer the world is going to subsidize a dysfunctional, weakening U.S. economy by supplying us with the goods that we are incapable of producing for ourselves. And then the dollar crashes, and that's the end of this game. Because to the extent that we can only spend our dollars on the things that we produce ourselves, that's where it hits the fan, because we're not producing things. And then price increases are going to explode in a much more visible manner. But it's already happening. I mean, prices are going up all over. And we want to pretend that, well, this is a one-time thing, it's transitory, it's because of supply shocks or shortages. No, it's a surplus of money. That is the problem. And we're creating even more. Biden just signed yesterday the $1.9 trillion spending bill. Americans haven't even finished spending their last stimulus checks. Now they're going to get another one. I mean, all this is inflation. The Americans are buying stuff that they didn't produce. There's no productivity related to this money printing. And so we're going to see surging prices. And it's the surging prices are not the inflation. They're the consequence of the inflation. The inflation is created by the Fed as it inflates the money supply to buy up all the bonds the government is spending so the stimulus checks don't bounce. Yeah, that's what the markets don't get yet. That's why the dollar hasn't crashed. That's why gold hasn't gone through the roof. But both of those things are going to happen when the markets really accept the fact that the Fed is not the lender of last resort. It's the only lender. And the only way the Fed gets the money to buy these treasuries is by printing it. And it's not just going to be treasuries that the Fed is going to be buying. The Fed's going to be buying municipal bonds. The Fed's probably going to be buying corporate bonds. The Fed's going to be buying everything because the Fed will be the only buyer. Because once people realize how high inflation is, let's say people accept that inflation is 10% per year. And it's probably higher than that if you measure it accurately. But let's say we're going to have 10% inflation per year. Well, no one's going to buy a bond with a nominal coupon below 10%, because it's a guaranteed loser. Well, pretty much all the bonds are paying less than that. Even junk bonds are paying less than 10%. So nobody is going to want to buy these bonds unless the interest rates rise to a high enough price to offset that type of inflation. Well, there's no borrowers that can afford to pay that type of rate. So all these issuers would go bankrupt, everything would crash. And so I think the Federal Reserve, in order to prevent that from happening, is going to try to artificially cap all interest rates, not just the rates that the US government pays, but that just about every borrower pays, because all they want to do is kick the can down the road. And that's just the next step in the can kicking process. But at the end of the day, the dollar has to crash.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.